So in this lesson, we're stepping back to candlestick formations. This is part 2. We again covered part 1 a few lessons back in the beginner, the foundation part of this course, right? So in this lesson right now, we'll be covering again candlestick formations using multi-time frame analysis, right? So confirming candlestick formations by using multi-time frame analysis, right? That's something that again we didn't talk about yet because we just learned multi-time frame analysis. So like I said, right now we will be covering different concepts using multi-time frame analysis, right? So in some lessons we're stepping back in time, right? So like in this lesson, initially we covered candlestick formations by just looking at one time frame. You know, what is a reversal? How does it look like? You know, but now, again, by using multi-time frame analysis, you can confirm whether it's actually a proper reversal candlestick, whether the market or that specific candle is actually rejecting that specific level, okay? Which is very important because sometimes we have traps in the market, okay? Sometimes we might have a reversal candlestick, but it's not confirmed, right? By knowing how to use multi-time frame analysis and by knowing what, you know, as an example, what a reversal candlestick looks like on a lower time frame, what it's supposed to look like, you know, because in summary, you have a reversal, right? That means what happens? You know, the market is potentially rejecting the specific level. A new run is potentially beginning, or a new pullback is maybe beginning, right? But we don't know yet, you know, it's just giving us a reversal candlestick. But using multi-time frame analysis and confirming using multi-time frame analysis, we can literally say, once we see that reversal candlestick, right, we can look at a lower time frame and be like, yep, we have a new trend. A new trend is beginning. Because in that concept, what we're pretty much looking at is we believe that a new run is happening. So by using multi-time frame analysis, we can actually check the lower time frames and see if a new trend is beginning on a lower time frame. Because again, we know that a run is a trend, right? So if a new run's happening, a new trend should be forming. So by using candlestick formations and multi-time frame analysis combined, you know, again, you're a step ahead. You can avoid those traps in the market by being, again, prepared, right? So that's it, guys. Let's have a look at candlestick formations using multi-time frame analysis. Let's hit the charts and have a look. All right, guys, so we're going to look at the charts right now, and what I'm going to show you is how to confirm reversal candlesticks using multi-time frame analysis. And I have a few examples here that I want to show you, but before I show you these examples, let's draw them out, you know. So let's do a few things, okay? So we focused on a few reversal candlestick setups in the candlestick formation lesson part 1, okay? We looked at low tests or high tests, you know, which are hammer or shooting star reversals. We looked at dojis, we looked at inside bars, we looked at bullish or bearish engulfings, okay? It's pretty much the major ones. And we also looked at tweezer bottoms and such, okay? Tweezer bottoms, tweezer tops, which are 2 low tests or 2 high tests put together. So we're going to look at every single one of them. There's examples of every single one of those reversals on this daily chart. So we're going to spend some time on actually digging into that. But let's first draw it out. And the purpose of this is so that you literally, because myself, the way I look at the charts, and if I see a reversal candlestick on a daily time frame, I already know what kind of price action that will show on a lower time frame. It's like engraved in my mind. So I want to take what's in my mind and put it right here on the charts for you guys, okay? The same goes the other way. If I look at the intraday charts first and I see a price action pattern, I can already be very confident that the daily chart will have a certain reversal candlestick based on that candlestick formation that we saw, or sorry, based on that price action pattern that we saw on the intraday time frame, okay? Because what you got to remember is the same principle that we talked about earlier when we looked at the multi-time frame analysis lesson. Run is a trend and a trend is a run, okay? So you got to understand that when a run is beginning, because we're catching the beginning of the run, okay? In whichever time frame you're looking at, you might be a swing trader trying to catch the beginning of a monthly run, or trying to catch the beginning of a weekly run. As a day trader, you're trying to catch the beginning of a daily run, okay? So it doesn't matter which run you're trying to catch. On a lower time frame, you should have signs of a trend reversal happening. Okay, so a run will be a trend, but we're trying to catch the beginning of the run, therefore the beginning of the trend as well. Okay, so that's what we're going to show you here right now, because when deceleration happens on a higher time frame, okay, such as the daily, monthly, weekly, when deceleration happens and we have a reversal candlestick, then guess what? We're going to have price action deceleration, such as one of those price action patterns that we looked at, either falling wedge, rising wedge, a flag, triangle, descending triangle, ascending triangle, head and shoulder pattern, double bottom, right? Or simply a higher high and a higher low, which is a first sign of a trend change, right? So that's all the concepts that we already talked about and you should be familiar with. So here we're going to put them together. So with that said, let's have a look at a low test. Let's have a look at a low test. So as an example, a low test such as this. We have a low test right here on the daily chart, right there. Price action was moving down and down and down and down. We were accelerating, and then we just hit this low test. We created this low test, and price action started to move up. Okay, in this pullback, and then before we continue lower. Here we had a tweezer bottom, so we'll also have a look at that. Here we have a bullish engulfing, so we'll have a look at that. Okay, but this low test, what kind of pattern could that give us on a lower time frame? I know it. I know exactly what it's going to give us, or very close to it. So imagine we have a low test reversal. Okay, so that would mean that price action is trending downwards first. Okay, so we have a lower trend. This is we have a bearish trend. This is the daily run, as an example, will be a 1 hour trend, right? So that's happening. Now, when will the low test happen? Because you also gotta kind of keep in mind that if a low test happens at the beginning of the day or at the end of the day, it will look totally different. So with that said, a low test could mean, let's imagine this is falling and the new day starts. Okay, so let's say the day closes like this as a bearish candle, okay, which means that the intraday trend is still downwards, but the day closes like this as a big bearish candle. Then the new day continues the bearish run on an intraday time frame, okay, like this, and then eventually midway into the day, maybe 12 hours into the day, it goes up. This movement gives us a low test, a bullish low test. Does that make sense? Because guess what? The intraday trend is trending downwards, right? Then the day closes on a daily chart, which means the daily is in a run. The day closes as a bearish candle because we made a new low, right? Then the new day forms and the intraday trend continues downwards. And then midway into the day, the intraday trend reverses and it's still a pullback. But this will give us a low test reversal on a daily time frame. But it's not confirmed. This does not give us confirmation, right? So that's what you also got to be familiar with, because we look at the confirmation, we use multi-time frame analysis to confirm our setups, right? So when we believe that a daily chart is rejecting a level because of a low test reversal, as an example, we need to be sure that that level is being rejected, okay? And otherwise it's going to be a trap. This is still a trap because guess what? We do not have intraday confirmation at this point. We don't have an intraday trend change. We don't have intraday bullish price action. So what we would need to see is either a higher low and then take the trade long, okay? Or we would need this to continue to give us a higher high, previous high, higher high, and then take it on the higher low. And you see what does give us? This gives us an inverse head and shoulder pattern, right? So a low test, sometimes it gives us full confirmation right away, but sometimes it doesn't give us intraday confirmation just yet, okay? Sometimes we need to wait for more price action on the intraday time frame, like a higher low or a complete breakout, such as a higher high, before we consider taking the trade. Otherwise, it just will be an aggressive entry, okay? And the same goes for higher time frames. If you have a monthly lotus developing, but all you really have is a pullback, right? So that's the thing. If a lotus developed, but it developed just because of a pullback on a lower time frame, like in this case, a lotus developed, but it developed just because of a pullback, that is not the most ideal entry because you don't have confirmation. If a lotus developed and on the intraday charts you have a trend change or bullish price action, then you have confirmation, right? So I hope that's starting to make sense, right? Let's imagine it this way too, right? A lotus can form if, you know, sometimes the day can close like this, and again, this is an intraday trend, and then continues lower, and then right away, like I said, just explodes to give us a higher high. You know, so that's going to give us a bullish lotus reversal, and at that point we're just waiting for the higher low, and then we're taking the trade long. Okay, and this can be on an intraday level, this will be on a daily level, monthly level, whichever time frame you're looking at. Okay, so intraday confirmation, lower time frame confirmation. What about a bearish engulfing? Okay, a bearish engulfing can look, or bullish engulfing, let's say bullish engulfing, keep the bullish trend in our minds. So the intraday trend is trending downwards, the daily chart is in a bearish run, okay? And then we have a bullish engulfing. What that bullish engulfing will typically look like is just a big bullish run on the intraday time frame, giving us a breakout. A bullish engulfing, or any engulfing candle, whether it be bullish engulfing or bearish engulfing, will pretty much immediately have a trend change. Why? Because it's an engulfing candle. So because if it's an engulfing candle, it typically cleared the previous intraday high and gave us a higher high, or the previous intraday low and gave us a lower low if it's a bearish engulfing, right? So with that, we typically have full confirmation right away. If there's a bearish engulfing or bullish engulfing, typically have full confirmation right away. Now, what about dojis? Dojis will typically mean that the price action on a lower time frame is decelerating. Okay, so what is deceleration? Deceleration, we looked at it, you know, so when you get dojis, it typically means that we're kind of within, you know, let's say this is wave 1, wave 2, wave 3, wave 4, and the wave 5 is happening, and then wave 5 might turn into like a falling wedge kind of thing, you know. And this will probably create dojis on a lower time frame, or sorry, dojis on a higher time frame, something like that. So dojis also don't give us full confirmation, but dojis give us deceleration, which typically forms as some kind of a pattern, deceleration pattern or price action pattern on a lower time frame, which eventually will cause a breakout, right? And then we take that trade. We either take the advanced breakout option, which is a strategy I will teach you, or we take the safer option once it breaks out. So this is kind of like, again, talking about that iceberg principle, you know, where you're looking at the daily candlestick and you just have the tip of the iceberg, right? But the majority of the iceberg is underwater, right? So this is kind of like looking at a daily reversal, but by looking at a lower time frame, like the 1 hour chart, the 1 hour chart is going to give you much more price action, much more data to analyze. And therefore you can enter positions that are pretty much fully confirmed. And that is what's going to increase your strike rate, your win rate, you know? Because otherwise, if you're entering positions on a daily reversal candlestick, such as a lotus, but the intraday chart does not give you confirmation yet, then it's a much riskier position. There's much more risk to it because it's not confirmed. There's no lower time frame trend change. If that makes sense. Okay. So that's the kind of stuff that you got to keep at the back of your mind. And this is where right away this is where it's getting complex now, advanced, because at this point, you're utilizing everything you have learned so far in the course. Everything from candlestick formations to trends to price action, and now multi-time frame analysis, and using it all together, combining it all together and using multi-time frame analysis for confirmation, right? So that kind of explains the drying process. So what I'm going to do now is I'm just going to show you a bunch of candles, a bunch of reversals, and then we'll see what happens on a lower time frame. Okay, so let's start off. I'm just going to jump back in time. Let's start off. Well, what happened here? On February, let's have a look. February 19th, or let's jump to February 16, 2018. Okay, so Feb 16, 2018. Let's have a look at the 1 hour chart at that point. So I'm just going to change it to 60-minute. And then I'll jump back to February 16, 2018. Just going to take some time to load. And there we have it. Okay, so February 16, 2018 is right here. So you see, it's exactly what we were talking about. Okay, this is when the low test closed. Exactly the 16th ended up closing right here. Okay, I'll put an arrow. This is when the 16th closed. So that is when the low test reversal closed on a daily chart. Okay, so what was I talking about? That we have a bearish trend. That was that daily bearish run. Okay, so we have a bearish trend giving us that daily bearish run. Then the 16th opened up, which the 16th opened up right here. And within that day on the 16th, we went down, giving us the wick because the open and close price is right here, right? So we went down during that day, giving us the wick because we went back up during that same day, closing higher than where we opened because we opened the day right here. Okay, so we ended up closing a little bit higher than where we opened, and because of that, that gives us a bullish low test. Do we have a trend reversal? Yes and no. There's kind of like a weak higher low here, nothing strong. If this ended up breaking out on a 1 hour time frame, then that would give us full confirmation, right? But this kind of is already confirming because of this weak higher low. It's just a very small higher low. Okay, once it fully broke out, then there's full confirmation. So that's an example of that. Let me just jump back to that daily time frame so you can see what that looks like again. And there it is. So that was right here, right? So we were accelerating downwards as that intraday trend was trending, and then we got this little low test, right? Which didn't give us much confirmation. It ended up going up, but didn't give us much confirmation at that point. This wasn't a trade I would have taken. Now let's have a look at the tweezer, or let's have a look at the bullish engulfing because there's a better tweezer to look at. Let's have a look at this bullish engulfing right here. So that was the 26th, March 26th of 2018. Okay, let's have a look. Jump back in time. So what happened here first? Okay, so we were accelerating downwards, so the intraday trend should be bearish, right? Because we were trending downwards. We were in this bearish run, so the intraday trend should be bearish. Then we started accelerating, and then all of a sudden we turned around, giving us a bullish engulfing. This most likely will give us a higher high. Okay, that's what will probably happen. It will give us a higher high on a lower time frame, a breakout on a lower time frame. So let's see if that's actually what was given. So jump to, I forgot the date. The 26th, March 26th. So let's jump back, 60-minute chart. So March 26th, that day has closed exactly right here. So what happened? Okay, so this gives us full confirmation. Why? Why does it give us full confirmation? So remember, the daily chart was accelerating. Well, check this out. The intraday trend is accelerating too. Then it bottomed out. Okay, almost a double bottom. But you can see how it was accelerating, small pullback, accelerating, pullback, a massive acceleration, another pullback, and then it just died. It made a new lower low, but it didn't create like a massive lower low. It's almost a double bottom, almost, right? So at the same time, it gives us bullish MACD divergence. And then when the day closes a bullish engulfing, boom, we have a breakout, we have a higher high. This is what happened right here. The price action decelerated, and then we broke out with that bullish engulfing, which is exactly what I was talking about, right? That is gonna give us a higher high. And then the entry came in right here when we had the higher low, you know, and then obviously, I'm not gonna measure the position size, but this is where we would have entered, right there, you know, with one of the strategies. So that's that. So you see how that's already starting to confirm, okay? Let's just go back to the daily chart and I'll show you another example. And then you're gonna get much more used to this by looking at the charts yourself daily, you know, because this is what we do. This analysis, you're gonna be doing it every single day. When you're making a daily watch list, if you're day trading or, you know, if you're swing trading, then you're gonna be doing every single time you make your swing trading watch list, which is probably gonna be weekly, you know. So that's exactly what you're gonna be doing. You're gonna be using this multi-time frame analysis to fine-tune and confirm setups. All right, let's have a look at this tweezer bottom right here. Okay, so tweezer bottom happened on the 26th of June. Okay, so June 26th, let's jump back. So we have a tweezer bottom, okay? Let me explain a tweezer bottom. A tweezer bottom, because I just realized that that's one that we didn't look at. A tweezer bottom will typically, because it has two wicks, okay? So there's wicks, it's two low test reversals, right? So tweezer typically looks something like this. So we have that intraday trend, then we'll pop up, double bottom, and then if it's a bullish reversal, if the second candle is actually a bullish candle, white or green instead of red, right? Close higher than where it opened, then we were gonna have a double bottom with a higher high. That's what a tweezer bottom looks like. That's why I love tweezer bottom reversals or tweezer tops when you have two high tests or two low tests put together, because that gives us full price action confirmed. We typically get like a double bottom, sometimes a higher low, and then a higher high. Okay, so let's see what happened there. So that was right here on the June 26, 2018. There it is. So June 26th, the day closed exactly right here. And do we have trend confirmation? Yeah. You know, so price action double bottomed out. Instead of giving us a double bottom, we actually got a triple bottom. 1, 2, 3. Then it still didn't give us a higher high, but at this point gave us a higher low, and then boom, broke out. Entry would have came right here on the retest of the previous highs, right? This is our full confirmation on the higher low. So that's trend confirmation. The tweezer bottom, that's why it's so good, because typically it gives us like a double bottom, in this case a triple bottom, and then a higher high, right there. Okay, so that's what's good about a tweezer setup. Let's go back to that daily time frame and I'll show you dojis. Okay, I'll show you what deceleration looks like, because that's the one thing we still didn't look at. So for that, we'll jump back to this right here. You can see that this is kind of like a weird head and shoulder pattern. It is a weird head and shoulder pattern. Left shoulder, head, lower low, and then right shoulder, but it's a little bit higher. It's not a perfect head and shoulder pattern, but it is a head and shoulder pattern. And then eventually it started to go back down. So right here, okay, what's happening? Because it's decelerating on a trend line. I have a trend line drawn in there, right, connecting the highs, and we're kind of decelerating on that trend line, but we don't have a major reversal candlestick like a high test or a bearish engulfing, but we have two dojis, okay? So price action was going up and up and up, and started to decelerating right here, smaller candle, see accelerating with this big bullish candle, and smaller candle, smaller and smaller, and then boom, move to the downside, okay? So what happened when the dojis were developing? I'm predicting that there's some kind of a wedge, or some kind of a triangle pattern on the lower time frame. So let's have a look. So this is December 12th, 2017. December 12th, 2017. And that closed, December 12th closed. Exactly there. Let's zoom out. And what do we have? A wedge with bearish MACD. So you see how it was accelerating upwards, and then right away it started to kind of slow down, and price action got squeezed within this wedge. It's not the most beautiful wedge pattern, but then eventually broke down, and the entry came in on the retest. Lower low, lower high. Okay, so this gave us like a full confirmation. It started off as a wedge, and then it eventually broke down. Okay, so when the candlesticks closed, when the day closes at double doji, at that point we were just within the wedge. We were right here when that double doji closed. This is literally where we were, just right there within the wedge. So we still didn't have the breakout. That's what I mean. You know, a double doji or that kind of deceleration of a doji typically still doesn't give you a trend confirmation, but it gives you a pattern. It typically gives you a pattern because a double doji or a doji means that it's decelerating. The daily chart is decelerating, which at the same time means the lower time frame is also decelerating within some kind of pattern, like right here. And you can see later it broke down, came back for a retest, and this is an entry short. This is the first strategy, the IBO. Okay, so we have the advanced breakout, which would have happened like at the top, but you know, it wasn't like the most amazing setup, but could have potentially been taken right there. So that would have been the ABO, the advanced breakout, and then this would be the initial breakout, which is one of the safest strategies out there. This is an advanced strategy. This is the initial breakout, is one of the safest strategies out there. And then that's where it would have been taken short. So that's that. You know, I'm gonna leave it at this. I pretty much explained a low test reversal to you guys. We looked at a bullish engulfing. We looked at a tweezer bottom. We looked at dojis causing deceleration. You know, you're gonna get much more exposure with this when you look at the charts yourself. And when we start digging into the strategies themselves, this is all that we're gonna be doing. You know, so that's gonna be hours worth of this type of analysis when we're doing full, combining everything together when we start digging into the strategies themselves, right? So we're gonna have much more of this type of content, but for now, all I really want you to know is that when there's a daily reversal candlestick, the intraday trend should be beginning. When the daily chart is decelerating and you believe a new run is happening, then the intraday trend or the lower time frame trend should be slowing down and decelerating, and there should be first signs of a new trend change on a lower time frame. Okay, and this doesn't matter. We were looking at daily and 1 hour chart here. This can be utilized using the monthly and the daily, weekly, 4 hour. You know, we're always using 3 time frames. You know, so in this case we only use 2 to keep it simple, to make a point, right? But typically we're going to be using all 3. But just know that principle, you know, that if the daily chart, or if you have a low test or reversal somewhere on a lower time frame, you should have a little bit more when it comes to price action. You should start to see confirmation. Okay, so that's it for this lesson. I hope that all makes sense. It should. If it doesn't now, once you finish the course, then it should. And if it doesn't, come back to this lesson after you finish the course, because you're gonna have much more exposure to what we just talked about. And once you watch the course one more time, then all of this will make sense. So that said, that's it for now, and I'll see you guys in the next lesson.